Once a scrappy startup dreamed up by PayPal alums in 2003, Palantir has grown into one of Wall Street's most hyped companies. In a nutshell, co-founder Peter Thiel, yes, that Peter Thiel, and a handful of co-workers built Palantir, named after Tolkien's Seeing Stone, as a tool to let government analysts see hidden data and fight fraud or terror. Early funding even came from the CIA's In-Q-Tel, and slowly Palantir stayed in the shadows, quietly racking up government contracts and later big-name corporate clients. Fast forward to today, latest quarter U.S. government revenue jumped 45% year-over-year to about $373 million, bolstered by huge deals, a $178 million AI contract with the U.S. Army, among others. Total Q1 sales hit $884 million, up 39% from last year. In other words, what started as a nerd's data lab has turned into a rocket ship of growth. Imagine a baby breathing fire and suddenly gobbling up castles. That 45% growth figure in U.S. government business sounds like magic, and it almost is. Think of it like fueling a rocket. Palantir's product is the jet fuel and each new contract is a booster. Recent quarters saw dozens of large deals. For example, Q1 alone had 139 new contracts greater than or equal to $1 million and 31 new deals greater than or equal to $10 million. It's as if Palantir handed out candy to every government agency and company, and they all took a second serving. In fact, CEO Alex Karp proudly noted in the earnings call that their Rule of 40 score increased to 83%, meaning revenue growth plus profit margin tops 183%. A blockbuster metric in software land. Karp quipped they're building the operating system for the modern enterprise in the era of AI, and investors are snapping it up like the next Windows for data. The upshot? Palantir's origins in 2003 feel like centuries ago. From a small group at PayPal to a $3 billion plus revenue run rate for U.S. government, up from under $1 billion a few years back, the growth is astonishing. Picture a garage band from 2003 that's now headlining Coachella. That's Palantir's story. Rock-solid fundamentals, more than just hype. Despite all the hype, and there's plenty of hype, Palantir's core business is real and booming. Its suite of software, notably Gotham for intelligence agencies and Foundry for enterprises, has become almost a piece of infrastructure for government and industry. For example, Gotham is IL-5 authorized for U.S. DoD mission-critical systems and is used by U.S. intelligence or community and defense analysts. On the commercial side, Palantir's Foundry is in the toolkit at companies like Morgan Stanley, Merck KGaA, Airbus, Wajo, Lilium, PG&E, Fiat Chrysler and more. In casual terms, Palantir isn't just selling shiny brochures, it's powering real decisions at the Pentagon, Air Force, Border Patrol, even the National Health Service in the UK, pre-COVID, as well as Fortune 100 firms. The numbers back up that strength. In Q1 Palantir produced GAAP operating income of $176 million, a 20% margin, and net income of $214 million, 24% margin. For a tech growth co that reinvests in R&D and sales, a 20 to 24% profit margin is huge. Its free cash flow is also enormous, $370 million in adjusted free cash, 42% of sales, and $310 million from ops, 35%. To put it simply, Palantir prints cash. Many startups brag about growth. Palantir is one of the rare ones actually profitable at scale. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. But wait. If you are interested in stock news updates that might be relevant to your financial targets, join us and become a member for member-only videos. Find the link in the description section below. It also has built-in recurring revenue. Over 40% of its top line comes from U.S. government contracts, which tend to renew year after year. They even teamed up with U.S. Space Force and other orbiting organizations recently. The rest is private sector, and that's been accelerating too. U.S. commercial revenue grew 71% YOY to $255 million in Q1, and the CEO bragged that U.S. revenue overall was plus 55% YOY to $628 million. In other words, growth is strong everywhere: government, U.S. businesses, and even abroad, though admittedly international was the one caution flag in Q1. Palantir's fundamentals, tech platform, customer base, cash flow, look rock solid. Imagine if Netflix, Amazon Web Services and War Games all had a baby, it'd probably be Palantir. Analysts note it as elite profitability for a software business, operating margins up to 20%. Their official guidance for 2025 revenue is now $3.90 billion, up 36% on the year, suggesting they see this growth continuing. All of this makes Palantir a bit like Coke of cybersecurity. Once you start using it, you can't quit easily, and you really don't want to, since it's saving your bacon. In short, Palantir isn't just blowing smoke. Its engine is humming, customers are locked in, and it's turning a tidy profit. From plunge to peak, breaking into the top 10. Then, something even more astonishing happened. By Thursday, May 8, Palantir's stock rocketed up 8%, no doubt fueled by bargain hunting and continued bullish press, and its market capitalization swelled to about $281 billion. Why is $281 billion a magic number? Because it made Palantir the new number 10 U.S. technology company by market cap, nudging out Salesforce, whose cap was about $268 billion. In plain English, a startup data nerd became more valuable than a SaaS colossus with 10 times its revenue. This was headline-grabbing. CNBC, via LinkedIn, announced, there's a new member in the top 10 list of U.S. tech companies by market cap. Palantir jumped about 8% on Thursday, bringing its valuation to $281 billion. That puts it ahead of Salesforce. Microsoft tops the list at around $3.3t. The Verge and others echoed it. Palantir had truly crashed the Silicon Valley party. And yes, articles gleefully noted its earnings multiple is astronomical. What does this mean? It's mostly symbolic, a very flashy one. Palantir is now in the same club as Apple, Microsoft, Amazon, Alphabet, Nvidia, Meta, etc., even if just barely. It's like seeing a freshman dressed in the varsity jacket at a high school pep rally, surprising, eyebrow-raising, and a story people will retell. For Palantir fans it was vindication. See? We were right, we're a big deal. For skeptics it was frosting on a crazy cake. Good luck, hope your belief holds up. Financially, it means investors bid the stock up so high that Palantir's market cap dwarfs actual rivals. As CNBC noted, Palantir leapfrogged giants like Cisco and IBM earlier, and now Salesforce. It tells us the market has colossal faith in Palantir's future. Or at least, lots of adrenaline-charged traders driving the price. Possibly this placement will attract new index funds and institutional investors, if they don't choke on the high PE. And it will continue to make news, and memes, that the small Palantir is somehow in big tech's top 10. $1,255 a share. Today it trades at a few $100s. $1,255 is like giving Palantir a $2.8 trillion valuation, nearly as big as Microsoft or Apple. It sounds impossible, but the stock market doesn't always play fair. Remember, GameStop was $480 for a bit. So, what would it take for Palantir to ever justify that price? Imagine Palantir becomes the big bad boss in every major tech sector. In this fantasy, Palantir's AI platform is the de facto operating system for all governments and enterprises worldwide. Every time a hospital needs a better database, Palantir gets the call. Even your smart toaster runs on Palantir technology. In this universe, Palantir captures, say, half of that entire $193 billion real-time analytics market that's predicted by 2032, and then probably doubles it. When companies spend $500 billion a year on data AI, Palantir gets a big slice, maybe eventually $100 billion per year in revenue for Palantir, a mind-boggling 20 times growth from now. With profit margins of 20% or higher, that could mean $20 billion profit per year. If investors then pay a still high 60 times earnings for a monopoly software, you get a $1.2t market cap, still short of $2.8t, but closer. That's one way to see $1,255. And more other ways. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love him and obey his commandments. Please acknowledge him in your plans and he will direct your paths. Proverbs 3 verses 5 to 6. Want more information? Please check the description section. Also again, if you are interested in more relevant stock news updates, consider becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today, your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Thank you, see you in the next video by God's grace. We love you, and blessings to you.